Hey everybody, morning. How's it going? Lieutenant Colonel Goose in the house. Seth, Diane, Svenborn, Craig, Arturo, Gary, Steve. I don't know. IJ, Will, Piet, Catherine, Mark, Darren, Man, Mary, Ed, David, Laura. Good to see everybody. If you're new here, make sure you subscribe so you can chat with everybody on the live stream. And, you know, welcome to another Morning Monster. Good morning, you magnificent monsters of trading and finance. Welcome back to the Morning Monster Show, the only show that I know of that cuts through all this noise and tries to tell you what's really going on out there, all before your first cup of, Monster, maybe coffee if you're more into the hot liquids. So, everybody's talking about this AI revolution, right? I mean, it's the gold rush, it's the, getting your picks and shovels plays, getting, power demand. Even your grandma's asking if, maybe she should be invested in some AI stocks, some NVIDIA. Your dog probably has a code to, get a neural network in the backyard and, get some treats or something. I mean, the market is acting hyperactive like a kid on sugar high, throwing money at just about anything with a .ai. But this all seems so similar. Here's the thing about gold rushes. The people who get rich aren't the ones digging for the gold. Most of the time, it's the guys doing picks and shovels. I talk about this constantly. And right now, we're seeing a massive seismic shift in the market. There's actually a great rotation happening under the surface that's separating the shovel sellers from the gold diggers who are about to find out their mine is full of nothing but rocks that aren't worth anything. And you, my friends, hopefully can be on the right side of it. Now, let's start with the losers. The ones that showed up to the AI gold rush with plastic spoons. Talking about software sector. You remember last year, software was the darling of Wall Street. Subscription models. I mean, this has been kind of the way it was for a while, right? Recurring revenue. It's the dream, right? Software as a service, SaaS, if you've never heard of that. It's a beautiful, beautiful dream. I mean, you hook people, they're using your software, they never give up the subscription, they just keep going. But right now, as AI keeps evolving, we've got open claw bots and all sorts of things. All of a sudden, that dream of subscription models not looking so rosy. The iShares Expanded Tech Software Sector ETF, that's a fancy way of saying a big basket of software stocks, is officially bear market now. It's down 20% from its highs. In January alone, it had its worst month since 2008 during the financial crisis. Ouch. So what happened? I mean, go pull up Adobe stock. Go pull up Salesforce. Go pull up Autodesk even. It's rocky, but so what happened? In a word, AI. But not the way that you might think about it. These software companies aren't being replaced by AI. They're being made to look like dinosaurs. They're like MySpace to AI's Facebook. They're like the Blockbuster Video to Netflix. Take a look at ServiceNow. Great company, right? They automate workflows. They make business more efficient. They reported good earnings, beat expectations, and the stock's down 10%. Why? Because in this market, good isn't good enough. Not when a company like Anthropic can create a new, more powerful AI model in the time it takes you to binge watch a season of your favorite show. And don't even get me started on SAP, the German software giant. They reported weaker than expected growth. Their cloud business and stock got absolutely punched in the face, down 15%. I mean, absolute bloodbath, everybody. Investors are looking at these traditional software companies and thinking, why would I pay a premium for your clunky old software when a super smart AI can probably do the same job and do it better, faster, maybe even for free if I click the right buttons. The whole investment thesis for software, that steady, predictable subscription, software as a service, all of a sudden it's being called into question. When the narrative shifts on Wall Street, time to get out of the way. But here's where it gets really interesting. This software collapse is just the first trimmer of the house of cards. The aftershock is where the real danger might lie. And the real opportunity for us who are savvy in the trading space, that's where the real opportunity is hidden. And it's hidden in a corner of the market that most people have never heard of. Private credit. Now, what in the world is private credit, right? I mean, private credit, how do you get in? Like, what the devil is that? Imagine a bank, but it's not really a bank. It's more like a cool, edgy cousin of a bank who rides a motorcycle, lends money to companies that are a little too risky for the boring suit and tie banks. These are often the kind of fast-growing, venture-backed software companies that are now getting crushed. And how do you, a savvy trader get a piece of all this action? Through something called a business development company, a BDC. These are publicly traded companies that are basically just big pools of private credit loans. They're famous for their juicy dividend yields. I mean, we're talking 10, 12% annual. The kind of numbers that make income investors just kind of drool a little bit. But here's the catch. There's a big one. The loans that these BDCs own, they're not traded publicly. There's no public market for them. They're very, very illiquid. That means their value is only updated once a quarter or so. It's like a student who shows their parents the good grades and conveniently forgets to mention that they're failing all the other classes until the report card comes out. And right now, the report cards are coming out. Right now, BDCs are holding a massive amount of loans to software companies. We're talking about upwards of 20% of some of their portfolios on average. Some are higher than that because that's the average. So some estimates put the total exposure over $100 billion. $100 billion. And that's all based on valuations from 2025, before the software sector decided to take a proverbial nosedive into the pavement. So you have these BDCs like Blue Owl, Ares Capital, Sixth Street. All of them have seen their stocks getting just punched in the face the last couple of weeks. Why? Because the smart money knows what's coming. They know that when these BDCs are forced to mark their software loans to the new, much lower market reality, their net asset values are going to crater, get crushed faster than aluminum can. And those juicy dividends, they're at risk. They may not be so juicy for very long. It's kind of a ticking time bomb, and the fuse is getting shorter by the minute, by the day. So don't worry, though. I'm not trying to scare you. I'm not trying to tell you that, all the BDCs are just burning down. I'm here to help you try to make some money out of this situation. And while the software guys are crying into their expensive lattes and the shovel sellers are having a party, I'm talking about the companies that are building the actual infrastructure of the AI revolution here. The ones making the chips, the hardware, the stuff that all this magical AI stuff actually needs to run on. The semiconductor sector is still on fire. Now, while hedge funds are dumping software stocks at a record pace, they're buying up semiconductor stocks like they're going out of style. But not just all of them. And it's for a good reason. We have NVIDIA, you know the name, hopefully by now. They're the undisputed king, but their stock hasn't moved in like 7 months. Billionaires are piling in, getting their piece. They have a massive order backlog, but it's not without risk. OpenAI admitted that maybe they don't have the cash to pay the bills. They can't make the chips fast enough right now. So in this AI revolution, this is the undisputed king of shovel sellers right now. Taiwan Semi, TSMC, they're the ones who actually make the chips for NVIDIA, for Apple, for pretty much everybody. They're a monopoly in all but name. I mean, if you called them the monopoly of TSMC, it'd probably be more accurate. I mean, as far as AI chips go, as they get more complex, TSMC's technology becomes even more valuable here. It's a boon, right? If you want to get into the people that make money no matter who's selling the chips, right now, TSMC. And another one, Broadcom, another big winner in the custom AI chip boom. They're not nearly as flashy as NVIDIA, but they're quietly making fortunes designing chips. And it's not just the chip designers here. It's the companies that make the equipment to make the chips. And right now, there's only a handful of those, like ASML, Applied Materials, KLA. Their stocks have been on a tear recently. But be careful. There can be pullbacks. I mean, this is the investment play, my friends. This is the great rotation out of overhyped, overvalued software companies. So if you have exposure to software companies that are the old guard, be careful. You may see them continuing to get ground down. And we'll see money rotate out into these other places. You know, these software companies are facing an existential threat from AI. We're seeing that money rotate out into the companies that are actually laying the foundations for the AI future. So what's the move here, though? I mean, I'm not your financial advisor, so you need to do your own homework. You need to dive into this stuff yourself a little bit. But if I were going to be a betting man, I'd be looking very, very carefully at potentially shorting some of the most exposed BDCs that have heavy software exposure, maybe higher exposure than the 20%. I mean, it's a risky play, but the writing's on the wall here. They're going to get marked down. They're going to get pummeled. And on the long side, I mean, semiconductor giants are a way to go. You can bet on them individually, or you can buy an ETF like the VanEck Semiconductor ETF, SMH. It's way up there and just keeps climbing. Or do something a little crazier like SOXX or SOXL. I mean, this is a story that's going to play out for the rest of 26, maybe into 27. I mean, this AI thing is not near maturity yet. We're still working through it. The software apocalypse and the rise of AI infrastructure is a classic Wall Street story of disruption. I mean, we had SpaceX yesterday acquiring XAI. So now the X platform, formerly known as Twitter, the Grok AI, it's all owned by SpaceX. The value of that company now, $1.25 trillion. Basically in the top 10 companies valuation-wise. Right near the valuation of Tesla right now. Are they going to merge those two? Are they going to merge SpaceX and Tesla? I don't know. And this is a hot consolidating mergers, acquisitions. Everybody talks about the $1 trillion SpaceX IPO, but really they're only looking at raising maybe $50 billion by selling some stock. It's not actually giant numbers. We're not talking $1 trillion IPOs here. $1 trillion valuation, but not actually $1 trillion worth of stock. And now, hopefully you know a little bit of the dirty secrets in the AI revolution. Real money made in the chips, not in the... I mean, if you've been paying attention to what I've said, you know the money's in the chips, not in the actual output. So go out there, do some research, get a piece of the action, and stay hungry, stay foolish, stay monstrous. Let's get some morning monster. Let's dive into some charts. Let's look for some opportunity. Let's see if we can predict where the market might go today and how we might make some money. Yeah, why does SpaceX need to go public? I don't think they do. I'm not sure. I'm not sure that's in the plan necessarily. And to be honest, Elon's been very vocal about how much he dislikes the corporate bylaw structure of Tesla. So the merger and acquisition could be that Tesla folds into SpaceX. I don't know. It'd have to be a shareholder vote and all that stuff, but it's possible. Maybe the private equity, and then you're less likely to be scrutinized as a monopoly and all that sort of stuff as you vertically integrate. Yeah, I've said for a while that the robot cars, the humanoid robots, the AI, the internet, it's all connected as part of the same grand plan, if you will. And I think even the boring machine thing, he's practicing here, but he plans to bore tunnels on Mars probably to connect. You can't just go walk around on Mars. So if you were underground in the tunnels, maybe that's part of the whole plan too. So it's a bold plan. We'll see how it goes. Anyway, all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation tended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you desire personal financial advice, hire and consult a financial advisor. I'm not one. I don't pretend to be one. I'm just a guy on YouTube making some predictions. I get lucky a lot. Just have a bag of unicorn dust. I don't have any crystal ball. I don't know for sure what's going to happen. I just, try to cut through the crap and read between the lines. So if you trade stocks, options, bonds, forex, futures, cryptos, treasuries, you might lose money. Be careful out there. Be careful out there. See how we might make some money today. So yesterday was kind of benign. Not really much news coming out financially. Today, not a big financial news day either. Tomorrow, not really a big financial news day either. Thursday, same. Friday, we might get some financial news if the government quits being stupid and we have this partial government shutdown thing going on and they're not going to release numbers if we're still shut down, I guess. Then University of Michigan has some consumer sentiment and inflation expectations. Yeah, U.S. government shutdown may impact these or cancel or delay or... it seems like we just got out of the last government shutdown and now we're back into one, which I knew they wouldn't resolve anything before we shut down again. It was just like kicking the can down the road in October or November or whatever it was, as we stared down the holiday travel season. Now they have no good excuse to reopen the government. We could just keep it shut down for months. So, yeah, be careful out there. Be careful out there. That's the name of the game. Now, gold and silver trading like meme stocks or cryptos. I don't know. Giant rips, giant dips, lots of chop. Nvidia right there. Third largest asset. Silver had dipped down and now back up number 2. And remember, law of big numbers. When you're sitting here staring at these trillion-dollar companies, they need trillions of dollars to double. So law of big numbers, once you're up here on the leaderboard, it's difficult to double or triple. Just keep that in mind. Look at ES, the overnight action here. It's been pretty spicy. We had a nice rally going yesterday, and we just kind of parked it right here. Overnight action, not really going anywhere. We just kind of, even though it seems like everything's spicy this morning, it's just hovering under the high from last Wednesday. Just kind of hovering right underneath there. That can lead to another swift one of these. Be careful. We've been kind of hitting our head right in this zone over and over. Banging our head, banging our head, banging our head. One of these is going to lead to a bigger pullback. So, caution advised. If we get below about 69.80, 69.70 on the futures. It looking like we could take a bigger swing down. On the cash index, let's just clean this baby up at this point. Just keep churning. Similar situation. If we get below that 69.40, maybe the 69.20 roadmap line, that's kind of a three-wave down, a three-wave up. That opens the door for another spill. Social media was ablaze over the weekend, saying that yesterday was going to be a big crash. Then we didn't. Be funny if today was the big flash crash, flush out thing. Be careful out there. In Q, first move down, retrace. Next move down, retrace. Small overlap. Still hasn't made a higher high. This is still set for a bigger flush out. Be careful. We can either break out or flush down. This is very overlapping diagonal fashion, which is usually part of a correction. Be careful. That's this price action is not very reliable. And Russell futures coming up here. So this is a cautionary pattern too. Uptrend of lows, we broke down, came back up, and we're back testing the breakdown. If we start down again, this usually leads to a bigger flush. The most clear example I have of this is this chart right here. We did this kind of breakdown right here, retested for quite a few days. This is a daily chart. Retested for quite a few days and then big flush in 3X Home Builders. Very clear chart. And we still haven't been able to recover here. So anytime I see that, golly, got some gravel in my throat this morning. Even after the monster. I drank all that monster right before I went live. So right there, that's back testing. If we break down, we can take a bigger trip down. Now, if we break above it, if we can get above that right shoulder, that would be the indication we're going on up to the target right up here around 3,100. So, fine point of contention at this point. Like, if we hold below this area, break back below the low, bigger correction. If we break up through this resistance, 3,100. Oil, jump back up to the daily charts. We're stuck between the resistance and the support. And as long as we hang in this area, sideways. So resistance right up here, that high from last week. This breakout right down here. And the roadmap line. 2 layers of support, 1 layer of resistance. Are we going higher? I'm not so convinced. This chart would look the best with a breakdown, lower low. This has failed at this resistance point. Once, twice, 3, 4, 5, 6. This will be the 7th time. This is a very, very firm resistance trend line. Till we get something up and out of here that's back tested the top, I would not be playing long on oil. And you take a pot shot, but flush out more likely. We haven't hit the ideal support zone down here yet. Down in the low 50s, high 40s. One big nasty flush out. That's what we need. Really bum people out in oil. And we're sucking people in right now. Lots of people getting really hopeful on oil breaking out. That's what they do. They suck you in. Done it 7 times. You know, this will be the 7th time. Suck you in and then flush you out. So be careful. Go. RTY. What's the cash? Yeah, RTY is the futures. RUT is the index, and IWM is the ETF. Bitcoin. So yesterday I drew a kind of roadmap for this during Market Masters. Pop that up and show it here. I think I saved it. Let's see. Where did I save it? Yeah, right here. Pull this over. So I drew this yesterday. Right here, we're potentially done bottoming right now. Like this is probably complete, 5 down. Now, if we spend the next, say between now and June, correcting this first move down, can bring us back up to the 104,000 area between now and June. Probably do a 3-wave move. It could do that as fast as like April, could take out to July. Somewhere in this zone, we're probably going to retrace up. It could be as, we could come up way shy. We could only make it up to 90,000. Could be 104,000. Could be as high as like 115,000. So this is a very variable. Corrections are difficult. All right. This is a very variable path, but probably going to spend the next couple months going higher. And then we're very likely, this is crypto winter scenario here, pretty much confirming with this move lower that we did this weekend that this is the path. Then we're probably going to do this big flush out. The ideal kind of target for this to finish up somewhere around early October, like the 2nd or 3rd, but it could go a little faster. We could be down there late August, September. Could go a little slower. We could be out there in November, possibly December. So it's a little bit variable here too, but likely to bottom somewhere in this $30,000 to $50,000 area. On further down, quite a bit further down. If we rally up to 100,000, that'd be like a 50% fleecing. If we just go down to 50, it'd be like a 70% fleecing if we go down to 30. Just be careful out there. Now, does it have to? No, I mean, we could bottom maybe in the $60,000 area. These are the ideal kind of numbers right here. And then once we do that, somewhere out here later this year, we're set to go higher again. It's just kind of the cycle of Bitcoin. It's the reality. So if you're hoping for something different, the reality keeps telling us that this is the operative path that we're on right now. So be careful out there. Be careful out there. So Ethereum probably going to do something similar. NKD trying to push higher today. Global liquidity indicator. If we go on higher, we have resistance up here at 56,000, and then 60,000 will be the next target up there if we're going to pop on higher. We're sitting firmly in the middle of this target bubble. The stretch goal was up there at 60. We're going to have to get out of this thing. And the higher we go right now, the more likely it is we come down and visit a much lower level like 45. And big flush outs in NKD have traditionally led to big flush outs in the US markets. So be careful. Dollar, struggling in here. As long as we're below this low from back there around Christmas, we still have downward pressure. If we break above it, we start tipping the odds we're going higher again on the dollar. That's counter to all the short dollar narrative. So be careful out there. If we still if we get above 102 on the dollar index, this whole narrative is going to change really fast about short dollar and weak dollar and all that sort of stuff. It's going to put a hurting on things like gold and silver continuing to grind higher. Put the pressure. I skipped over gold. Gold, watch out. Watch out here. High and low, 618 resistance at 51. Golly. watch for that resistance. If we get above it, we can go higher again. If we stay below this zone, take a trip down to the roadmap line, and that would be what I would expect right now. Primary expectation, further continuing lower, but time will tell, I guess. Apple coming up to the resistance. As long as we're below it, we can take another trip down. If we can get above it, upside right up there, 295. Amazon still has the 265 target. Earnings coming up Thursday? Yeah, Thursday. Google, earnings coming up tomorrow. So watch out for this one. It could definitely do a retrace to the roadmap line down here around 270. Next upside resistance, 385. They are kind of a leader in the public companies that have AI models. Now, Meta nip it at their heels a little bit, but Google has chips, has AI models, pretty good one, and they're not playing around. They've been using AIs for a long time. Been training them, using them, real world applications, but we just don't see them. It's like the recommendation engine for Google Ads, now AI. The recommendation engine for when you search, AI. The recommendation when you're watching YouTube videos, AI. So they run a lot of their company on AI recommendations in the background. Have been for a long time. They've been practicing. Now, the other big company using AI applications is Tesla. And Meta's trying to get in the game. This breakout may come back, retest this roadmap line here. But right now, we've got two indications / confirmations that 1,100 to 1,300 is the operative target. This could take 1 to 2 years to get there, maybe possibly a little longer. Microsoft about to hit the target. Beautiful. I played the first drop, got out. There he goes. This is setting up to be a bounce like Meta has. So Meta did this big retrace right to that 618, held, came back up, retested a higher one, and now we're set to go higher. Microsoft, if we can hold on here, can set up the bounce. If we break down, so Microsoft's kind of in that caught in between. Like, they're in the AI space, trying to build some AI stuff, Copilot or whatever, but they're also in the traditional software as a service sector that's getting pummeled. So they're kind of caught in between when you look at this right here. Is it a software company? Is it an AI company? Is it an everything company? We're not sure. So they're getting pummeled a little bit. Other stuff like Adobe, traditional software as a service, even though they're trying to have some AIs and image generators and stuff, this is, continuing to get pummeled. And funny enough, this target's been on there for a while, even before all this AI stuff came around. So charts are the charts. The narrative is just the narrative. The narrative fits the charts. Be careful. We humans love stories. CRM. I've had this bubble down here for a long time. We're getting close to it. It's just kind of funny. SAP. Get pummeled too. So all these software companies just getting absolutely beat down. Archer Daniels Midland, that's a seed company. NXPI. Chopping around. Semiconductors. See, not all semiconductors are rocking and rolling. This one, struggling and probably has further down to go. PayPal making lows. And look at that. Anybody traded for that 42 target? Oh, golly, I can't even believe that. I've been talking about that target for 3 years. Holy bananas. maybe 4 years. I drew this on the chart way back here. I can't even believe that. Dang. Well, if anybody traded for that 42, congratulations. I just been waiting for it. I don't usually trade stuff short because the market doesn't go down in general. In general, the market goes up, 10% up, 8, 9, 10% average per year. So I trade with the market. Don't fight the market. 90% of stuff goes with the market. But I've had this out here for years. I don't know what I'm going to talk about on PayPal anymore. That's so if we hold that, great. If we don't, probably coming down to 34. Dang. Surprises me a lot. Wow. Wow. All right, back to the Mag 7s. Got off there on Microsoft. Nvidia still stuck between support and resistance. Resistance at 195, support down here at the roadmap line, keeps climbing a little bit, and then a back test of the breakout down here on the orange zone. This was the resistance, and we broke out back here in the summer of last year in 2025. If we get below this zone right here around 175, probably going to come down here to 150 and test that. If it holds, going higher. If it doesn't hold, bigger correction in store. Tesla, one of the only companies I know of that has real world AI robots out on the world doing stuff in millions of customers' hands. Right here. Consolidating under this 1 hour roadmap line. On the daily charts, still struggling here. Haven't touched the roadmap line on the daily. I thought after earnings, we may need to dip in there, tag it so we can rip. It looked like that was the dip and rip, but it faded into yesterday. Kind of flat, up a little bit today, but this still looks like we're going to dip right into that roadmap line. If some sort of announcement that Tesla gets a piece of SpaceX or can buy SpaceX, this could be at 700 in a blink. So be careful betting against it. Netflix poking a little lower, still grinding on the bottom of this. This is what yesterday I was saying. I'm not sure this is going to be the bottom. Here we are poking lower. This sets it up to go down into the 60 to 70 range. Down off the bottom of the chart. Be careful on Netflix right here. Seeing a bigger fleece out. And streaming service, but also kind of software. So be careful. Now, as far as gainers, these are things moving $2 or more up in the pre-market. I pull a gainers list. I pull a decliners list. Things moving down $2 or more in the pre-market. And just kind of build a list to look for some opportunities. Things that might be out there. Korea back to rocking again. Despite the pullback yesterday. Gold coming back up on the list. But I think we've got further to go on the downside. AGQ. Look at that all the way to the roadmap line. If we can get the bounce going here. We got the high. We got the low. 266 would be the resistance. If this is going to go up higher, 516. And getting a bunch of alerts coming through. SanDisk, rocking and rolling. So, hard storage companies, hard drive companies, just keep rocking and rolling. These are probably all going to get a big pullback here. Palantir was popping. This is still bearish. We came up shy. Despite the pop on earnings, this is still due for a drop right in here. Based on the price pattern. I've had that on the chart since back in November when we topped up here. Hood. Oh man, look at that. Right into the target zone. Possible to get a retrace on down to the low mid to low 70s, but this can finish up any point here. Hood and Palantir kind of riding with the same chart. Precious metals baskets. Looks like glitter might be coming on down. DVA. Wow, look at that pop. Let's see what we got going here. It's kind of spicy. So this could be, watch for this one. Like if we can stick above that roadmap line, this could be set for a rally. Basically a double. Right on up in here for DVA. Davida loco. So the resistance coming up right here, that prior high. We get through that. Set up a bigger pop. So you could aggressively buy now. Confirmation on a move up through 155. We're probably going on up here to 250 to 300. Beautiful. Beautiful, beautiful. Axon. That's aerospace defense getting pummeled here. Where's the low? That could go on down pretty significantly here. Be careful. AEM. Gold miner. Due for retrace to the roadmap line. Southern copper. That held up really well. Despite the fleecing in metals. That's set for going higher. Palladium. My big opportunity play here. This might be an opportunity to get in at a discount. I have a feeling this is going to outperform. And as this industrial metal gets realized, the real shortage here, we might see the 360 target on this. WPM. Wheat and precious metals. Watch out for the retrace there. I'd be careful messing with gold miners right now. Popular to go after big movers. This ALB probably come back to retest that breakouts, and then we set up the bigger run up to 400, maybe even up to 600 or 700, 800, maybe 1,000. MPC chopping in here, has the setup to go higher, 243, but it could take a while, like possibly into next year even. Gold, gold, gold. FedEx. Wow. Man, look at that. That thing is set to pop on up here. 525. Whereas UPS is trying to make new lows, it looks like. Golly. This thing's struggling right here in a downtrend. Laying off more people. But FedEx is a different story. Popping, baby. 560. Breaking out a long term. Boom. Applied materials. And watch for the retrace there. Things that are ridiculous. It's time to book profits. Move on to opportunities. You don't make money chasing the highs. EWI. If you want a piece of SK Hynix and Samsung, that's the way to get it. Or KROU. Ring. Or gold. AMD. I would be careful here. This chart would look best with a drop back to the roadmap line and a lower low than this low we made. But if we hold this 618 retrace area and bounce, it's probably not going down here. SMH, like I said, this is an opportunity. If you just want broad, diversified exposure to semiconductors that are in the AI sector, there you go. LRCX keeps on rocking. Probably going to retrace at some point. Bloom Energy, probably going to retrace at some point. KMT, hit the target. Watch out for the next retrace. I'm a trend pullback continuation trader, so I'm looking for the pattern. CCJ. Up with the targets. ASTS, hit the target. Watch for the retrace. SQM. This one still has opportunity to come on up 139, possibly up to 250, 300. Rocket Lab, due for a revisit of the roadmap line. This thing probably going to get up to 80. Got really darn close at 69. Coming on down. Today at 5 p.m. I have my 30 Minutes of Awesome show. That's where I do requests. So if I'm just skipping over something that you want to see, make sure you come 5 p.m. Eastern tonight. Come hang out, make your requests. I'll do it usually for an hour, and then I go into Ask Me Anything for channel members. So if your name's in green, you got a little star. Channel member, you support me and my family doing this, then I'll do an Ask Me Anything and hang out for till basically the questions die down. So that's something you want to be a part of. Make sure you set a reminder in your phone to come hang out 5 p.m. Eastern, and then probably around 6 o'clock we'll do the Ask Me Anything until, like I said, till the questions die down. So TDG bounced off there, probably going lower. Sometimes I find better opportunities in this pullback list. So look for this to find support right around 400. Go higher again. IT. No bottom in sight. MLI. Roadmap line. ATN. This could be a turnaround like this. That held support where I expect it to hold support. If we break through the 363 area, 413 on the upside for ATN. Intuit. Another software company getting beat down, punched in the face. Try. Thomson Reuters. Man. Software and services. News. Just getting beat down. Pummeled. HubSpot. Pummeled. Gulam. China's an opportunity here if we can actually break higher. Oracle may not, they're going to be insolvent here. The writing's on the wall that they have a $50 billion commitment that they can't cover. And unless they raise the cash for it, they got themselves in a jam. Now, services now, getting pummeled. Where's the low? This is the spot to bounce if we're going to bounce on service now. Right there. If we get below this, probably coming down for a new low. It's funny, they just did a split and getting pummeled. Splits have not been bullish the last couple of years. XYZ, Square, formerly known as Square, Block, whatever you want to. It's officially, they're called Block. It's the company that runs Square, set for a dip on off down here in the 30s. Similar to what PayPal did. Mamo, yeah. Massimo. Is that that's real estate. I was like, is that clothing? All right, so I brought 10 setups, good for a potential entry today. And I'm not sure I like this one, but we'll go through it anyway. Pull up the statistics on these. There's the entry. Boom. Boom goes the dynamite. So here's the high, here's the low. Entry and 16 target. Low price stuff. Be careful. Dollar below. The low is the stop. So it's almost a 10% stop. Be careful on that one. Not the biggest fan. This one stopped out last time. Set up a new entry. High, low. Entry 47.32. Statistics not great. FSBW. And this thing slowed down all of a sudden. Roadmap line. There's the entry, 44.94 target. Stop is down here, 38. 887.2. Good numbers, but no statistical significance. Need a 30 population to be a statistical significance. And this is already in the trade from back here, and it hasn't been able to push higher, so be careful. HIG. Here's the high, here's the low. This one's been trending and continuing and getting upside targets, and 142.50 target, 26.69, 1.6. This is below average on the win rate, below average. This is 4 trades less than a statistical population. Getting close. 1.6 is above the average. So 142.50 target right up there. India ETF. I'm not a big fan of this downward trend, but here's the high, here's the low, there's the entry. 55.17 target. LPLA. I talked about this on something else yesterday. It was on one of the lists yesterday. Here's the high, here's the low. Entry 397 and stop out down here at 346. Oh, what's that? ORRF. Kind of blends on my screen slightly. There's the high, here's the low. Entry 39 target, target's not very high up there. Statistics not very good. Ozark, OZK Bank. Okay, this was just kind of a choppy deal and almost to the target at 50 already. Negative profit factor would cause me to be cautious. This was a very fast retrace right there. Not sure. Usually that gets filtered out, but it liked it. 32 target and negative profit factor again. And Valgara Village Supermarkets. VLGEA. Entry 40 target. Stop is down here, $1 below the low, around 32.60. And another negative profit factor. Just not spectacular. The list here today not filled with giant opportunity. HIG, maybe one of the best ones on there. All right, so I'll go look at the bias for the day and try to figure out, based on options, volumes, and stuff, where we might see, the play here. So jumping into SPY, let's kind of look at the gamma exposure, the GEX, check it out, see if we can figure it out where we might have some exposure. Man, this thing's being slow. Slow. Still going, dang. There we go. And there was a zone yesterday. I thought based on options we might pin down here, but we ran up higher. So that tended to not be the case. Let's look at the gamma exposure via bullflow.io. The bubble looks like we still got 700 as the cap and potential down to around 687 on the low side. So hold on. Hold on with the 700 and 687. So we got a little more downside to go. And then got this big level hanging out here for Friday. So the market may tend to travel down. It's like a flame down here. The moth of the market tends to fly toward the flame. Looking at the levels for today. Now these put levels are bigger out here for the 20th than they are for today. Another big level for Friday, but so that'll influence this chart over here because it takes into consideration everything. That makes it a little more difficult to kind of predict. I think that's what skewed it yesterday too. I would venture to guess we hang out around 692 maybe. This is right where we are. We may hang out here the rest of the day. be where they could kind of screw the most number of options holders. Now it can get away, like it can start running. Does not have to stop here at the bottom of the box. Does not have to stop here at the top of the box. It's just where the options players kind of suggest that we might find support and resistance based on the bubble. The bubble is where the bigger numbers are, but there's no billion-dollar levels in here. Not even out here for Friday. It's only 600 million. So these are very light levels for SPY. Usually we're seeing 5, 6, 7, 8, 900 million, if not 1.1, 1.2 billion dollars. But there's nothing like that on here. So SPY players are being a little more cautious. And then that means QQQ is probably also light, which means the market, when we have light levels in here, means the market's more free to just do whatever the heck it wants. And yeah, there's not really big levels in here. That's kind of scary. No. And this thing does update live. So it looks like 626, 626 on the upside. And I'm going to go with 614 on the downside. 626 and 614. QQQ. Yeah, yesterday we got closer on Qs. 626. And 614. Oh, look at that. Same kind of range. Just, let's see what the levels might suggest for QQQ. I'm just using the roller, zooming in and out here. It looks like somewhere around 621. Just trying to balance big levels on purple with big levels on yellow. But there's, still there's nothing being played this week. It's even more dramatic where the main players on Qs are out to the monthly, not really playing the dailies at all right now. And that leaves it more free to move around. So somewhere around 621, which would be up here. I don't know. It doesn't look like we're going to pin there to me. It's based on the chart. It looks like we're just going to, this might be a run down day. And be careful. Like this starting to do that thing I was talking about where this could reject and go traveling down. So based on the ES here, here's the high, here's the low. Yeah, already had that. Here's the high, here's the low, there's the high. This would be kind of the target zone down here if we get continuation. And then SPY chart, kind of bringing that back over here. Turn off Apollo. Here's the high, here's the low, here's the high, there's the low. That could be a target down in this zone right there. If we break down on the bottom of the box, we may find support down around 681 for today. On SPY, QQQ, little different story cooking here. Yeah, this already looks like we're breaking down, so. Ching. If we're going to run, be down around 609, 607. Well, it's a zone right down in here. And then we have that bigger bubble from last week sitting down here too at just below 600. So if this actually gets out of the zone, out of the bubble for gamma, we could see this run on down in here. In Q, same kind of situation. Got the first move down, we got the retrace, and so right now we're looking for this 618 to hold right here on these. That'll be the same on QQQ. Well, it's already below the 618. Yeah. It'd be the 618 of this bigger swing. See, this is what could be a play here is that we're sitting there at the 618 here, but that's the first attempt, second attempt, third attempt. We poked through that, probably coming on down, and continuation is down here. So first support Second support. And that's the way the Qs. Now, based on gamma, we might just hang out right here all day. Same on SPY. Based on gamma, we might just hang out here all day. Or, that's the range. So, just if it gets away, could be seeing it push on down in here and then on down even lower. Hopefully that's helpful for everybody. And you can see they don't support a down move, but, I'm just looking at the price action. Sitting on support. And never know what who tweets what and causes a big panic flush out in the market. Just going through price action. The options suggest we're going to hang out in these zones. So there you go. Have a great day. I'll be on Market Masters 11:30. Excuse me, 11:30. Links in the description. Be back here 5 p.m. Eastern. Do requests. And otherwise, I'll see you tomorrow. Same bat time, same bat channel, 9:15 tomorrow. We'll hunt for opportunities yet again.